What's good, traders? Welcome to another episode on the trades we missed last week. So on this first trade, we'll be looking at how bullish the market was. And first of all, as usual, we check on the higher time frame. Well, now I'm on the 3-minute time frame, and you can also use the 5-minute time frame. So basically, we are going to be looking for a fair value gap. So now we have a fair value gap here on our 3-minute time frame, and this can be seen also on 5 minutes. So the opening of Monday, that is the Monday's opening, we have a reaction from that fair value gap here, and after that reaction you can just see our break of market structure here. This is our break of market structure, and since we are anticipating a bullish trade, we could just put our entry here at this second fair value gap here. So after market taps our first fair value gap, we'll anticipate for a new break of market structure. Then prior to that, we have our fair value gap right here. So at this start of the fair value gap, we can take our entry just like this, long position here, and our take profits can be here at this previous high right here. So this is our previous high here. Then our stop loss should be at the end of this low that created this fair value gap. So this should give us a 1.6 ratio risk to reward. Or you can also put your stop loss here at the end of this candle that created that fair value gap right here. So this should give you a higher risk to reward ratio of 3.33. So that should be our first trade of our Monday's opening by 7-8. So let's go on to our second trade. Now our second trade, as usual, we see that market has created for us a fair value gap right here, and after this fair value gap has been tapped into, we anticipate for our break of market structure. So we anticipate a break of market structure here, as you can see how market taps into this fair value gap created for us, break of market structure, and prior to that break of market structure is our fair value gap right here, like the previous trade here. So we should be anticipating an entry at this spot here. As you can see, this fair value gap right here is our entry for a bearish trade. So now let's put our entry here. This is a short position entry for this fair value gap. Our confirmation for this trade is because market has tapped into a previous PDRA, which is our fair value gap right here, and we have a break of market structure indicating that price wants to move bearish. So now we have our trade projection, and our stop loss is here right above this high, and our take profit should be at any fair value gap just like this. This should give us a risk to reward of 2.5. so this is your fair value gap right here that market has shown. Or still, you can use the low right here. So as you can see, if you are not going to use this fair value gap as your first TP, you can use this low that has been created here, giving a risk to reward of 3.86 ratio. So that should be the second trade for a bearish entry. So let's move on to our third trade, and our third trade is still on Monday, on the 9th of Monday. So we have a bullish trade here. As you can see, this is a fair value gap market has tapped into. This is a fair value gap as usual. You can see this fair value gap right here, And the next thing we would look for is a break of market structure. And remember, we are on a 3-minute time frame, and you can see a break of market structure. Price broke above this high right here and also closed above it. So the next thing we need to look for is a fair value gap. Now, as a fair value gap being created here, if we move on to our 5-minute time frame, we'll see a clear fair value gap, but you can also see a fair value gap right here. You can see this is our fair value gap, and market has closed above a previous high and also a previous high right here. So we are going to be anticipating that price should tap into this fair value gap or this order block right here. This is a bullish order block. So when price taps into this area, this should be an entry for a bullish trade. The reason for this trade is because market has tapped into a previous fair value gap and now created for us a break of market structure and a fair value gap right here. So this should be our number 3 trade, and you put your stop loss right below this low right here, and the take profit should be at the previous high right here. This wouldn't give you a good risk to reward ratio of 1.39. You can also put your take profits at this previous high right here. Should give you a risk reward of 2.5, and if you had taking your profits at this spot, this order high right here, let's put it here, this should have given you a risk reward of 4.89, and you can see how market tapped and went to our take profit right away. So the next trade is our number 4 trade. Now let's sit for our number 4 trade. Now this is our number 4 trade, and that's indicated that there's a fair value gap right here. You can see from this spot here, we have a fair value gap and we have a breaker block right here, and you can see how market tapped into this spot right here. We anticipate that market should tap into this area and give us a break of market structure and a newly formed fair value gap. As you can see here, market tapped here, and this is on Tuesday. Market tapped into this fair value gap, meaning this is a demand area, and we anticipate that it should give us a break of market structure here. You can see how market broke this previous high and closed above it also, and gave us a good fair value gap right here. And this fair value gap is not something you would play with, so we'll just highlight this fair value gap to the end of this order block right here. So now we have a trade. So from here you can project our entry, our long position right here, and your stop loss should be below this area, this low that created the fair value gap, or this order block right here. This is an order block you can use for your stop loss. You put your stop loss right here, and your take profit should be at the end of that previous high, which is here. This is your previous high, this is your previous high right here, and you can see how market tapped into and hit your take profit right here, giving you a risk reward of 5.23, and if you had kept your stop loss here, it would have given you a risk reward of 2.95. So that would have been your number 4 trade, a bullish trade it is. So the next one is our number 5 trade. So let's look for our number 5 trade right here. Okay, so we have gotten our number 5 trade here. Now you can see a fair value gap right here. This is a fair value gap here, and market taps into this fair value gap, did not break any structure, did not break above any previous high. Now you can see how it tapped again and broke this previous high here. It broke this previous high and also closed above it. So the next thing we would look for is a tap into a fair value gap, which is right here. You can see this fair value gap here. This is an opening space for market to fill up and tap into it. So this is an opening space for your bullish entry. So now this is your bullish entry projections. So your stop loss should go here, right below this previous low right here, and your entry at the start of that fair value gap right here, and your take profit should be at the previous high, or you move back and you see where the previous high would have been. So this is your previous high here as your second TP. So let's move past it and see how that would have been. So this would have been your first TP, or your overall TP, giving you a 2.3 risk to reward ratio, or at this spot here. You can see how market tapped into this area and went bullish to this spot, even going past it. Now this is our number 5 trade. Now let's move on to our number 6 trade, which is this right here. This one right here is our number 6 trade. Given that we have a fair value gap here, you can see a demand area here. This is a fair value gap, and market tapped into this fair value gap and broke above this previous high. This is an indication that price wants to go bullish. Now created for us a fair value gap. Now at this spot, this is where you take your entry, because there was a breaker at the back. This is a 1 minute breaker. If you go down to your lower time frame, so you just put your entry here, and let me use the demonstration tool. So this should be your entry here, and you put your stop loss right below that candle that created that fair value gap. So here is where you take your profit. 2.62 is where you take your profit, or you can put it here. This would have given you a 1.63, and some people are preferring to get just 1 point risk reward ratio. And if you want more, you'd go to the back and check your previous high. Is there any high that should have been taken out right behind your trade here? So you go back and check any previous high that should be taken out, and if not, you can just settle for this right here, or you take it past. You can see where the market rallied to, giving you a risk reward to this spot right here, risk reward of 14.57. So the next one is our number 7 trade. So our number 7 trade, as usual, we check for a fair value gap that market taps into. So after market taps into that fair value gap, we are going to anticipate a break of market structure right here. We have a break of market structure here. market also closed above it here. So market coming back, you would look for a good fair value gap right here, being our number 7 trade, and we'll put our entry here at the start of this fair value gap right here, our entry here, and our stop loss should be here. Our stop loss is here below this low right here, and your take profit should be the previous high. As you can see, market tapped and took out this previous high, giving you a risk reward of 3.22. So that should be our number 7 trade. Now on to our next trade, which is our number 8 trade for the week. Now this is our number 8 trade, and you see how market taps into this fair value gap at first. There is a fair value gap here. See this fair value gap here? Market taps into this fair value gap, comes down, gives us a break of market structure here, and the next thing you'd look for is market tapping into this fair value gap right here. Market filling this fair value gap, and you have your entry. So let's put it all the way here. This is your entry right here for short position. Your entry is here. Your stop loss is right above this candle here that created the fair value gap, and you have your take profit right below any previous low. So you have your take profit here. So this is your take profit. So I was on point right here. Your take profit here, giving you a risk to reward of 3.44. So that will be your number 8 trade, which is a bearish trade. So the next trade we'll be looking at for the opening of the new week, Monday's opening should be here, because we have a fair value gap right here that market respects. Market respected this fair value gap right here and created for us a fair value gap here also. So this has been tapped into. This was a trade on its own here, as you can see. This is a trade here. Market giving us a break of market structure here after tapping this area. So this would have been a trade, and you see the previous low was tapped into, giving you a risk reward of 3.91, as you can see here, 3.91. So on the next trade, which is Monday's opening, we can as well see a trade here if markets want to fill in this fair value gap, and we have a trade like this. So we have a trade like this, and since I've analyzed this trade before, we also have a fair value gap on a higher time frame. So let's check the fair value gap we have on a higher time frame here. Let's go to our 15 minutes. You can see a fair value gap right here. You can see market tapping into. You can see market tapping into this fair value gap right here. So we are looking at another fair value gap at this spot here. So if markets close above these spots, and comes down to fill in this fair value gap, it will give us a bullish trade. This will be a bullish trade. So if market taps into this one, gives us a bullish trade to the upside. So those are my projections for the new week. All right, so see you on the next episode on the trades you missed last week. Comment down below which trade you took. Is it 1, 3, or 8, or number 8 trade you took? All right, peace.